Good morning, everybody, and happy Wednesday. We'll get started here in just a minute. If you guys have any questions that you want to bring up, please let us know. And then we'll get started here in a second. All right. Very good. Okay, good morning, everybody, and happy Wednesday. It's the 5th of February today. This is our morning show. I'm Serge Berger from the Study Trader. If you're here for the first time, this is our morning show. We do about 10 to 15 minutes going through the most important points that we see in the markets here for the time being. So let's get started. And I think the first thing I want to go through here today is I want to look at the dollar. And I think, I always say that the dollar gives us a lot of clues to other asset classes as well. And so what I would like to point out to you this morning is just looking at the dollar index chart. You can see the dollar obviously had a big rally attempt on Monday, so a couple days ago, and basically failed up there. Now, the jury is still out whether that was it for the dollar. What I will tell you is that if the dollar is topping here, that'll have profound consequences on all sorts of asset classes. And I just want to point it out that to me it's not actionable yet. I know people who have some pretty sizable positions on that. I'd love to see how we close on the week, and this is a little bit more. A bit more in the weeds of things, but without getting too wonky in terms of macroeconomics and all that kind of stuff, the dollar does dictate a lot of things, and so I want to be very watching that very closely. So that's the weekly chart of the dollar. Again, we basically failed to make a new high, and if that were to change and the dollar were to back off, that would be a pretty significant change as far as things go in the risk on, risk off world. If the dollar were to go down, we could see things like commodities go higher, and the equity market. Hard to say. I don't want to make a call because I just don't know honestly. But speaking of cross assets, before we look at a couple of individual stocks, I've got a pretty good list of stocks I want to look at here. Let's look at yields. So we've talked about yields on the 10-year. These are U.S. Treasury yields. Let me make it a bit more appealing, this chart. We've talked about, that sort of 5% mark being in play at some point. Obviously, that's not the case yet, and we're not calling for that just yet. But that would be another thing to watch for if yields were to go on a sort of a decent march higher. Now, that's enough about sort of macroeconomics here for right now, but I would watch those two things very closely. We're going to keep you updated here. If yields were to make a serious push towards 5%, that would be a problem for the equity market. The dollar going down, if that's the case, again, it's at a pretty critical point here, would be another thing we need to watch for very closely. Again, I don't think it's actionable here right now today, unless one wants to kind of make a currency bet. And if one wants to do that, just as an FYI, I don't know if anyone here trades currencies, but there are some people making some long euro trades here that I'm seeing. So long euro, short dollar. I'm not there yet, but it's something worth watching. So having said that, there are a few stocks that I want to point out here this morning. Now, first of all, this is a stock that we pointed out, I'm going to say a couple of weeks ago, and I did actually add it to, for those of you guys that are Market Rover members, I did add it to the active watch list on the Market Rover. This is the watch list. So if you're using the Market Rover, and I hope you do, go into the active watch list. We added it. If it wasn't last week, it was the week before. It might have been last week. I can't remember the actual date was. But I think this is a stock that's really interesting. They've got earnings coming up, not until March. So we've got a bit of room there, but this is a really interesting stock to watch. I think again going into a bullish trend. By our estimates, there's a good 20-25% of upside. Again, I would not want to be in the stock through earnings from a trading perspective. If I make an investment decision here, I have no problem holding it through earnings. But again, it has to be an investment decision. So, if you look at the stock technically, if that's all you do, then what you would see is that this is a stock that's been consolidating. It's been consolidating in this big sort of base basically since June of last year. Then it had that big sell-off. And what that sell-off was, if you guys remember, there was a big internet outage, like a global website down outage, like airlines and everything. And that happened in June, mid-June. I remember the day very well. I was actually flying to Spain that day, or the day before, actually. I remember on Thursday. I know on Wednesday, 2 days before. And so I was very lucky to not have to travel that day. But I remember it well, and it didn't really fundamentally change the company's business. So now that the stock is back up here and consolidating, I think this is 20-25% upside is what we would see here. Again, earnings coming up later on this month in March, so about a month from now. And I don't want to be in this through earnings from a trading perspective, but from an investment perspective, I would. What's the difference? Well, if I say I'm going to own this stock because I believe in it for at least a few quarters, hopefully for a year or two, then I have no problem owning it through an earnings report. If I'm looking at it from a trading perspective, which is multi-day, multi-week, I don't know why I have to be in it from a trading perspective, because the potential outcome or initial reaction to earnings can be anywhere. It can be up or down, right? So that's the difference with that. And if you guys have any questions on that, that's a fundamental, thing that I see a lot of retail investors struggle with. And, I'm doing my best to kind of make sure people learn from that and not treat trades like investments or investments like trades. It's very important to keep that separate. It's a bucket, right? Having two buckets, or an investing bucket and a trading bucket. So that's what that is. That's stock number one. Stock number two that I want to watch and I'd like to point out to you for today, and we will, of course, continue this discussion and watch it over in the Trade Ops chat room. But that's Uber. Now, Uber pre-market is actually trading down around $65, $66 or so right now pre-market. So it's not a huge move, honestly. It's still kind of in the same spot. I don't really have much to do with Uber. If it were to break above $70, that would become interesting. So that's this point in the chart here. Let me quickly point this out to you. So if this stock were to be able to break above $70 and hold, even though it's down after earnings here, that would be quite impressive to me. So it's going to open down this morning around $65. That's a few percent, I guess. It's about 6-7%. It's not nothing, but this is a volatile stock. But if it somehow manages to overcome that and break back above 70, that would be very interesting to me. Looking at it on the Market Rover from a trend perspective, this is a stock that has actually been quite choppy. It's in a new one-day uptrend that doesn't count. We usually want uptrends to be in position for at least sort of 3 to 5 days, so you can ignore that, certainly given the fact that we had earnings today. So the stock is kind of in a neutral zone as far as the trend goes, and that's exactly why I would like to see it break above 70 before there's something to do. So those are two stocks, okay? So CrowdStrike, Uber. You guys good so far? Give me a quick thumbs up if you're enjoying this. Third one is AMD. And obviously, AMD is one of those stocks that reported, or one of those companies, I should say, that reported earnings last night. The stock is currently trading pre-market down about, let's call it 9%. So it's trading currently about 108 pre-market. And so what I want to just point out with AMD, that's about down here, is where the stock is trading, about 108. You can see this. I don't know if you guys can see this. It's this faint little orange line. That's where the stock is trading. Pre-market. So let me quickly, I'll put the circle around it. That's where the stock is trading, and it closed up here last night. So it's leaving a big gap. Now, what's important about AMD, there's a lot of people that are very bullish this stock. They don't even know why they should be bullish. They're bullish because some guy on TV said they're bullish, or because their neighbor owns it, and because it has an AI, sort of lettering to it. Here's the reality with AMD. Okay, if you have a process that actually follows a measuring and mapping of trends and trend changes, then you would have seen that this stock on our market rover became a bearish trend, bearish at $163 back in October. Then you wouldn't be trying to chase the stock here or scramble this morning when the stock is going to gap down 9%. So the stock remains in a bearish trend. Again, it's opening at 108, which also means it's reaching the second profit target down here this morning. So it remains in a bearish trend until those facts change, until the stock is back into a bullish trend, or at least neutral, and then gives us maybe bullish momentum. There's nothing to do as far as I'm concerned on the bullish side. Now, that can happen today. The stock can have a huge reversal today, and then we'll have something to trade against. But right now, it doesn't. So I think for 2025, what I would like to kind of bring across here is that there are going to be a lot of ways to lose money, and the more open-minded we are, the better position we're going to be in to be able to make money. So open-minded. Don't, just because everyone on TV tells you NVIDIA is a great company, doesn't mean you have to go buy call spreads on it. Or Palantir, which we'll get to next when it's gone vertical, right? You need to be open-minded to all sides and have both a trading bucket and an investing bucket. If you don't want to invest, then, okay, everyone has to invest, put it that way. But my point is, if you don't want to have different time frames, then what you can do is just kind of put that money to someone else to manage, and then just do the trading bucket. A lot of people have a difficult time with the investing bucket, but they like to dabble in the markets and trade it. But you have to have different buckets. I think that's very important. That's AMD. To me, nothing to do. It's going to gap down 10%, and then we'll see what happens. We'll cover it in the Trade Ops chat room. CMG is another one that's moving this morning. Nothing really going on there in the trending perspective. It's just choppy. But what is happening with CMG is that this morning it is gapping down to an important area. So this is another stock to watch, and I would watch this very carefully because it's coming down to this area. It's going to open up around 55, at least that's where it was when I was watching it before. Yeah, it's still around that area. So it looks like it's going to open down there. Now, the $55 area has a lot of history. It's got history as a support in October, then it got choppy, but it's also roughly where the stock gapped up from in March of last year. So if you extend this line, you can kind of see how that's an important level. So I think if 55 breaks, this stock has a lot more potential to go down. But again, it's got to break and hold below there, at least on a closing basis. And then last but not least, obviously, Palantir. This is a stock that has turned essentially into almost a meme stock. Now, this is a real company. Obviously, there's nothing sort of funny about it like that. It's not like a GameStop or something like that. But it is trading at very, very healthy, rich valuations, not healthy. And, this is going to be a stock to watch. I personally think it's dangerous to chase it up here. But I think there might be a trade if it starts to fill the up gap from yesterday. I think it's an interesting trading stock. So what I'm watching, I can show you this quickly. So this is yesterday's up gap. So I want to see how the stock acts around yesterday's lows, which was around $100, let's call it $100, roughly. If this stock can trade and hold below 100, it might be interesting for the aggressive trader to buy a put spread for a trade. And then if that works and the stock gives us an outside reversal day or something, that all has to happen first, right? Then there might be an opportunity to be short the stock from a multi-day perspective, Remember, options are going to be very expensive here in this stock. Palantir has options. Let me quickly check. The implied volatility, it's come down. It was as high as 87. It's now closer to the high 60s. So I don't really want to be a buyer of put options here. If anything, a put spread to offset, an expensive put that I have to buy with another one that I might sell, or an options credit spread. But again, this all has to happen first. We first have to see the stock break and hold below 100. If it does that, otherwise there's nothing to do on the short side in my view. And then Palantir on the daily chart, as a result of that, would have to give us an outside reversal day to the downside. On the upside, honestly, it's really not that hard. If the stock breaks and holds above yesterday's highs, maybe there's another momentum play to the upside. If you have the let me see here. If you have the TSD trender indicator, then obviously we had a beautiful buy signal on the trender a week and a half ago. Obviously, one would have had to hold the trade through earnings, which I don't do, but the point is it would have worked. What you want to do, though, you want to watch very closely how momentum is acting intraday. Yesterday was choppy because the stock just gapped up and then kind of just went sideways. So if you get downside momentum and the stock breaks below these levels, then I think that would be a very interesting thing to watch. Pre-market, the stock it's more or less flat. It's trading like 102 ish. So again, I need to see the stock break below 100. If it does that, then we'll see if there's an opportunity here to trade it to the downside. So those are our top few things here. A bit longer today, a little bit more than 15 minutes, but I hope it was helpful. Again, please give us a thumbs up, please subscribe to the channel so that we can continue this morning show, and so that you are alerted in real time when we go live. Again, we're going to go live a lot this year, not just in morning shows, but also when there's important news, big moves in the market, which we fully expect to be happening this year. And we're already seeing a lot of that. A lot of the initial sort of moves around tariffs and so on have moved the markets, and we think that's only just the beginning of a lot of opportunity we're going to get this year. So thanks for listening. See all of you guys in the Trade Ops chat room. We've got a couple of trades here lined up, as I just said. So we'll see you guys over there. And also we'll see you back here tomorrow morning, Thursday morning, 9 o'clock Eastern, sharp. See you then. Take care.